Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The Indian Rupee saw its sharpest drop in nearly 2 years on Friday, sliding 0.6% to a record low of 85.74 per dollar. Concerns over India's trade deficit, slower growth, and the dollar's global strength continues to weigh on the currency, which has been setting fresh lows this month. The central bank's significant short forward position adds another layer of complexity to the rupee's trajectory. Good morning, JK. While global markets remain calm, it seems our very own rupee has been quite volatile. What's your take on its recent moves?
Good morning, Swaraj. So the rupee did see substantial weakness on single day weakness on Friday, and this has happened after I think this intraday a large move has happened after a very long time. And but if you look at the move overall towards 85, 80, and pronounced weakness in the last 1 month or so, it has been already always on the cards, except that it was not happening because RBI was suppressing the move, which was the natural tendency from the market, because buying was predominant and selling was much less, and even flows were on the negative side. Apart from that, external factors have been negative for the rupee, along with other currencies also have been moving weaker. India's macros have been challenging because growth rate came down, inflation has been higher. So RBI has very limited scope for cutting rates immediately. Then the trade deficit also came as a last straw on the camel's back, because that increased to 37 billion, which is a record. So all these factors definitely pointed to weaker rupee. And then, of course, we had this RBI bulletin which showed the rupee overvalued by 8% as per RER terms. So this move on Friday happened once RBI moved out of the market at 85.30, and there was good amount of demand. It also coupled with month-end factor or settlement factor. So that's we saw it led to a move of 40 plus paisa in no time. Got curbed after they came in with a heavy intervention at 85, 80 and brought down. But this is clearly a signal what can happen if RBI is not intervening, and what is the natural uh, you know, uh, tendency or trend of the rupee. So that we really got a trailer of what can happen if RBI does not intervene like they have been doing earlier. And so that the trend is very clear. What can we perceive as to change this trend is if only dollar strength reverses overseas. That's not on the cards immediately until at least Trump takes over, or if the flows return. That also has a question mark, because we have the FIs may want to wait till the or clarity emerges on Fed policy, on whether higher inflation is going to lead for a long pause by the Fed, because yields in US are already higher at 4.63%, and it may move towards 4.8 and 5% also. We do not know. Of course, at those levels, we might see even Fed or the Treasury coming and stopping the yield going up by through some means, and that can weaken them. So right now, we are not seeing any indications of weakness in the dollar overall. And that is also going to be another factor for rupee to continue to weaken. The pace is definitely increased after RBI moved out of the market on Friday. If they continue to adopt similar policy, we should see a much larger uh, weakness for the rupee beyond 86. This is what I feel. Why would we want to see rupee not weaken when when we have our exports, which is not doing well when the RER is very high. And yes, the only context can be if imported inflation goes up. But I think at the moment, uh, that may not be the prime concern. Yes, if it gets to a stage there is a panic movement and all that, that is when we have to worry about taking stronger policy measures. So all in all, my view is that rupee will continue to weaken, and probably RBI will adopt a more hands-off policy. They will come in when there is a excessive movement intraday, but possibly allow market to determine the value of the rupee more proactively than it was being allowed earlier. That is what I feel. On the global markets, it has been very quiet. As you have seen, the major currencies are moving in ranges. And again, it's all flow related right now, because usually we see the month end bringing in some flows in favor of other currencies, particularly the euro. So we have seen the euro move above 1.04, and even same with the other currencies as well, because the dollar index since September has moved up 8%. Not will not be surprised if you see a 1% correction by the time we wind up for 2024. But there also the trend is very much clear. Until something happens to change the trend big time, it's very difficult to foresee right now, because the yield differences are very much in favor of the dollar. Growth is in favor of the dollar, and other economies are not doing well. So all these things point to higher dollar further, until there is a, again, just like RBI, what I said, until they come out with some policy measure which weakens the dollar, the Trump administration, and that is going to take some time. We are not going to see any such policy measure from the interim government in the US as well. So overall, dollar remains strong, and although in the next 1 or 2 sessions we may see some corrective moves in the dollar to the downside. Those have to be used for buying the dollar, definitely. Same thing goes for gold. I think gold is finding it very difficult to go above 2630. Seems like having given very good return of over 30% in the last 1 year. I think gold is also set for some retracement, but it's not changing its main trend, which is up. So overall, the view remains one of a strong dollar, but probably these two are not the days when we should take any stake and wait for the first week of the month, when liquidity returns. That is when we will have a clear movement on the currencies, and that will be a time also when normally a new trend or a continuation of the existing trend is set. So we'll wait for those moves. Until then, quiet market is what I foresee. And yeah, we will update again tomorrow for the last time in this year, before we move on to 2025. Thank you.
Thank you, JK. And just quickly summarizing, rupee saw substantial single-day weakness on Friday, and the theme, the major theme, and something JK also touched upon is that this seems to be a trailer with respect to what happens when RBI also moves out of the market, and the RBI may also take a more hands-off approach and only intervening when there is a very big, where there's a sharp volatility which arises. So this may be a new approach which the central bank must also be taking. When it comes to the other uncertainties, we already have the growth challenges, the trade deficit issues, and of course what the RBI bulletin showed of RER being rupee being overvalued considerably. All of these factors, along with the emerging market currencies remaining weaker against the dollar, and the higher yield in the US, along with the Fed's longer pause in rates, creating uncertainty for the FII flows, all of these is somewhat negative for the rupee, and the overall trend which JK mentioned, it remains of rupee weakening further, and even when it comes to the global markets, dollar index has come off from its recent highs, but the trend of the dollar still remains intact. The US exceptionalism, pause in rate, the pause in possible reduction in possible rate cuts. All of this is supportive of a higher dollar. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.